Do you know why the US-China trade war from 2018 until now still has no end in sight? The truth that governments don't want you to know is this isn't a battle over tariffs or goods, but a life or death struggle for control of the global financial system. Today, I will reveal the secret that 99% of people have no idea about. The real war isn't happening at ports or factories, but in the boardrooms of central banks and massive investment funds. Listen, when Trump imposed 20% tariffs on Chinese goods, who do you think really suffered? American consumers had to pay higher prices, Chinese businesses lost orders, but what about Wall Street and multinational corporations? They made billions of dollars from this volatility. That's the truth. The trade war is just a smokescreen to hide the real currency war taking place. After reading this, you'll understand why gas prices rise when US-China tensions escalate, why the dollar strengthens and weakens in cycles, and most importantly, how to protect your assets in this currency war. Let me be straight with you. Trade wars are never about trade. That's just a palatable name to make it easier for people to understand and accept. Look at this number. From 2018 to 2024, total US-China trade volume still reached over $600 billion per year. So where's the war? The reality is that large corporations are still making huge profits. Only consumers and small businesses are suffering. The real war is about three things. First is control over global capital flows. Whoever controls the money flow decides which countries develop and which countries decline. This isn't conspiracy theory, but how the modern financial system actually operates. Second is the status of the US dollar. When China creates its own payment system with central bank digital currency, when Russia and Iran trade in their domestic currencies, these are direct attacks on the foundation of American power. Third is supply chains and data. Whoever controls supply chains will control global inflation. And data? That's the oil of the 21st century. Does this look familiar? Every time trade tensions escalate, the stock market actually rises sharply. Why is that? This is the scenario repeated since 2018. First, they create trade tensions causing market panic. Then large funds buy in at low prices to accumulate assets. Next comes temporary reconciliation, causing sharp market gains. Finally, they sell for profit and prepare for the next cycle. While you worry about rising prices, they're making billions of dollars from this volatility. This game is designed for them to always win. Now let's talk about the real weapon in this war: currency manipulation. Have you ever wondered why when the Chinese yuan strengthens, Chinese goods become more expensive, but it benefits Vietnamese exports? The truth they don't tell is every country is manipulating their currency, but with completely different purposes. China deliberately keeps the yuan weak to make exports competitive. But this is a double-edged sword. Too weak and foreign capital flees, too strong and they lose export market share. The US prints money frantically through quantitative easing policies to maintain dollar dominance while exporting inflation to the entire world. Do you think why gold prices rose from $1,200 to $2,000 in 5 years? Europe and Japan apply negative interest rates to stimulate the economy, but in reality, it's to devalue their currencies and support exports. So who are the real victims? Small countries like Vietnam. We're like leaves in a storm. When the dollar is strong, foreign capital withdraws from emerging markets. When the dollar is weak, foreign capital floods in, creating asset bubbles. Look at this cycle. From 2010 to 2015, the weak dollar caused foreign capital to flood into Vietnam, making real estate and stocks rise frantically. From 2015 to 2019, the Fed raised interest rates, so foreign capital withdrew, causing market decline. That's why wealthy Vietnamese always hold assets in foreign currency or gold. They understand that VND is just a transaction tool, not a wealth accumulation tool. Central banks don't just print money, but have an entire arsenal of sophisticated weapons. First are currency swap lines, when the Fed lends dollars to other central banks. Sounds benevolent? In reality, this is how America controls global liquidity. Next, central bank digital currencies aren't for convenience, but for complete control of money flows. Every transaction will be monitored, every dollar can be turned off remotely. Finally, ESG standards and green bonds. Sound familiar? This is how large funds direct capital flows as they wish, under the guise of environmental protection. Now let's talk about supply chains, the modern economic weapon. The truth that elites don't want you to know is whoever controls supply chains will control global inflation. Let's see how this game works. Before 2018, China was the factory of the world, with 80% of electronics, 60% of textiles, 50% of chemicals, all from China. After 2018, multinational corporations began diversifying supply chains. Sounds smart? In reality, production costs increased 20 to 30%. Who suffers? End consumers. iPhone prices went from $1,000 to $1,200, not because of better technology, but because supply chain costs increased. Reshoring, bringing production back home, and friendshoring, moving to friendly countries, are praised by media as miracle solutions. But what's the reality? U.S. labor costs are 10 times higher than Vietnam. To produce a $5 t-shirt in Vietnam, in the U.S. it would have to sell for $20 just to break even. The result is large corporations get subsidized by the government with your tax money, while consumers have to pay higher prices for the same product. Who wins? Corporations get both subsidies and higher selling prices. Who loses? Citizens and taxpayers. Vietnam is praised as the winner in the trade war. But let's think about whether we really win. What we gain includes orders transferred from China, increased FDI, increased export turnover. But what we lose is also significant. Increased environmental pollution, imported inflation due to dependence on Chinese raw materials, risks when U.S.-China conflicts escalate. The harsh reality is, we're just an assembly hub. Core technology, brands, and high profits still belong to foreign countries. Countries like Vietnam, Thailand, Malaysia are in a caught-between situation, economically dependent on China for trade and investment, security dependent on the U.S. for military and technology, finances controlled by both. This is exactly a catch-22 situation. Choosing either side carries enormous risks. So what's a smart hedging strategy? First is diversifying trade partners. Singapore does this very well, and trading with everyone, but not completely dependent on anyone. Vietnam needs to learn this model. Second is developing domestic technology. South Korea once depended on Japanese technology. Now Samsung competes head-to-head with Sony. That's a lesson for us. Third is diversified foreign exchange reserves, not just holding dollars, but having euros, yen, even gold and Bitcoin. Don't put all eggs in one basket. For ordinary people, personal strategy in this currency war is very important. First is asset diversification, not just saving VND, but having part of assets in USD, gold, and real assets like real estate, stocks of companies with competitive advantages. Second is investing in skills, because the technology war is happening. People with digital skills, AI, and languages will be the winners. Third is understanding economic cycles. When the Fed raises interest rates, prepare mentally for market decline. When the Fed lowers interest rates, that's time to consider investing. For small businesses, need hedging strategies for exchange rates by using forward contracts to protect against currency volatility. Diversifying markets to not depend on just one export market, and investing in research and development, because technology is the only thing that can't be easily copied. But let's look further. This war isn't just about economics, but also geopolitics. China is building Belt and Road to create its own trade system, challenging the US-led order. America responds with Indo-Pacific strategy and alliances like Quad, AUKUS. Europe seeks strategic autonomy with initiatives like REPowerEU and European Chips Act. All aim to reduce mutual dependence, but the consequence is the world being divided into separate economic blocs. What does this mean for you? It means goods costs will increase because supply chains are no longer efficient. It means inflation will be higher due to lost global competitive advantages. It means geopolitical risks will increase as major powers compete more fiercely. But there are also opportunities. Intermediate countries like Vietnam can benefit from bridging different blocs. New technology sectors will boom due to autonomy needs. New investment forms like digital currencies will develop strongly. The reality is, the trade war has evolved into a technology war. The chip war between the US and China isn't just about economics, but national security. Whoever controls semiconductor technology will control the future. The AI war isn't just about production efficiency, but about the ability to collect and process information. The clean energy war isn't just about environment, but energy independence. All are interconnected, creating a comprehensive battle over who will lead the world in the 21st century. Now you understand the truth. Trade wars are just smoke covering the real currency and technology war taking place. This war has no absolute winner. America is gradually losing its global financial monopoly. China still isn't strong enough to completely replace it. Europe is seeking autonomy, and small countries like ours are learning to survive in this game. In the next 5 years, from 2025 to 2030, the dollar will remain the main reserve currency, but its proportion will decrease from 60% to 50%. Central bank digital currencies will become reality in most countries. Supply chains will be completely restructured according to geopolitical blocks. Opportunities include ASEAN countries having advantages in the bridge role. Clean technology and AI will be booming sectors. Digital currencies and digital assets will become main hedging choices. Don't believe what governments and media say about free trade or fair competition. The reality is everyone is manipulating, just with different degrees and methods. Understanding cycles is most important. Every crisis is an opportunity to redistribute assets. Those who understand cycles will buy when others sell, sell when others buy. Create your own rules of the game. Don't play by their rules. Instead of competing on price, compete on value. Instead of depending on one market, create your own market. If you find this article useful, please share to help awaken more people. Don't let them continue deceiving us with vague concepts like free trade or globalization. The real war has just begun, and the winners will be those who understand the true nature of this game.